You're watching the Mortgage Busters and Investment Show, and yes, we have a change of name, or our changes name slightly from Mortgage Busters Show to the Mortgage Busters and Investment Show. Adrian.
Yes.
Welcome back to the show.
Thank you.
Isn't that fantastic?
Yes.
I mean, we normally talk about mortgages, paying off the mortgage and doing that at a fast rate of knots. But a lot of our conversation is around investing and retirement.
That's right.
Isn't that the case?
And other ways of getting an income to help you pay off your mortgage.
Exactly. For example, property,
Yes, correct.
shares,
Yes.
forestry, doing all sorts of weird and wonderful things.
The problem is a lot of people have to work other jobs to end up paying off more of their mortgage,
Of course.
or find different ways to leverage themselves.
And we all know that to retire today, you need about what?
1.5 million.
$1.5 million, which is, that gets you about what, I don't know, $75,000 a year,
yeah.
which is sort of a comfortable or reasonably comfortable life, if there's no other debt.
Correct. And most people have debt.
Of course. So we've got Justine Pollard from Smart Trading. Justine, welcome to the show.
Thank you for having me.
Thanks for coming.
So, you're a trader.
That's right.
You've written books.
That's right.
You've come from sort of a normal routine life, wage earning lifestyle to becoming a trader and writing books and doing seminars and being, an active trader and doing well.
And pay off her house, that's the whole thing.
Of course.
From trading.
I'm a property investor as well.
And property, of course, yes.
So can you tell us a little bit of history and how you sort of got started and how you got to where you are?
Okay, basically I didn't grow up with much, so mum and dad struggled financially. They went through the interest rate times that a lot of our parents did, where interest rates were up near 20%.
And don't we remember those days?
Yes, and they had a block of land as well as our home, and nearly lost the home during that period. They ended up having to sell a block of land and taking a loss on it because they had no choice. There was no income coming in on that block of land. So that was the big lesson that I learnt, how important it is to have something.
That's a big lesson.
Yeah,
Absolutely.
with income producing on it. And because there was no income and the interest rates were so high, things were very difficult. So they managed to hang on to the house, thankfully. And yeah, I just had this burning desire inside just to have a different financial outcome for myself.
So where did that come from? Was it just innate in you? Or?
Yeah, I just think when you see your parents, go through some struggles, you just want it to be different. You want, if you can help them, and one thing my parents did instill in me is saving money. Mum was a good saver. She was a good shopper. Always knew bargains and sales and things like that. So I was taught those things. And I started working from the age of 12. So I was working up at the local news agency up the road from the house, and I was earning money from the age of 12 and babysitting as well. And then as soon as I turned 14 and 9 months, I got what I call my real job, where I could officially work, and at Donut Dan, working at the donut store. And
Donut Dan.
Yeah.
He should have franchised that. It's a good name.
Absolutely.
So yes, I've been working since the age of 12, and then when I left high school, my grandfather said to me, well, you've been saving up money from all your part-time jobs, why don't you invest it in the stock market? And I said, well, how do I do that? So he was an investor himself. He's a buy and hold, live off the dividends type person. And my boyfriend at the time, who's now my husband, we actually met at high school, and his grandfather was exactly the same, bought shares and lived off, the dividends. So we were given 4 share names, and he checked with his grandfather and he agreed with these 4 share names. And in those days it was all about buying for dividends. So this was back in 1991. You could buy anything in 1991 and do very well in the stock market.
Well, yeah,
there
correct.
was a really good bull run. So there wasn't much strategy in there. There was just buy it. And I had this desire to want to get started in property pretty early. So we actually bought our first property.
But why property? Just
wanted to own my own place and get started and start paying it off. So we got started when we were 23.
But was your mindset in investing or just paying off the home? Or both?
Well, both. It was because it started off as an investment, but then we moved into it.
Oh, okay.
So we used the investment, the rental income to help bring that mortgage down, and we were also paying off the mortgage at the same time. But being the type of person I am and wanting to invest, I read a lot of books. So, and if there was a seminar in the local area, I'd go along and listen to it.
So that's the difference, because most people just they take on they want a home and they take on a loan, but they do the bare minimum and they just leave it to Providence or whatever, you know. But you're being proactive and making sure, you know, educating yourself and finding out what works. Yeah,
and I was fortunate enough that I could stay at home. I got a job after I left high school, started off with a traineeship, and kept my part-time job at the same time, still working Thursday and Saturdays. I think it was called Venture back then. I think it's Big W now, but I kept my Thursday and Saturdays because I earned more on my Thursday and Saturday job than I did on my traineeship. So I had those two incomes coming in, did my traineeship, and did a lot of TAFE courses throughout as well. So because I was going to work, doing TAFE courses at night time, I wasn't quite ready to want to move out of home either. So, and my parents were encouraging me if, you know, I wanted to get a start, I could stay at home. I paid board. We all had to pay board. It wasn't like we had a free ride at home.
Did you have to pay board? No, I paid board. Yeah, that's for sure.
He tried.
Yeah. Yeah, it probably took us 9 months to find the first property that we bought. It was, you know, we looked at a lot of houses. We're from the Sydney Northern Beaches, so we spent quite a bit of time. We were after a house originally, but there was just a lot of houses that need a lot of renovation, and we're not renovators. I don't, you know, that wasn't our mindset. We wanted to buy something that we could instantly put a tenant in there and rent it out straight away and not have to do a lot of work on it. So we sort of...
So you already had a game plan in short. Yeah.
And when we started looking, interest rates were at 11% and they were charging 1% higher if it was an investment loan. By the time we bought, we started looking, I think, early in 96. By the time we bought later in 96, the interest rates were down to about 9%. And they went down to 7% pretty quickly. So I've just, you know, seen interest rates higher as well, and they have never been that high since. So when we did find, we were looking at a house, and the real estate agent said to us, well, why don't you go and check out this unit? We said, we're not after a unit. And she said, yeah, but the unit's $240,000 and you could get $300 rent a week. She said, run the figures on that. And I'd been doing Jan Summers, read her books, and she has a PIA program. So plugging figures into that.
Which is the Property Investment Analysis program.
Yeah.
We've got like about 30 seconds before we go to a break, just letting you know. Yeah.
Okay, and plugged the figures into that, and they looked great. So we went and looked at this unit. My husband fell in love with it because it had panoramic views of the ocean, and he's a surfer. He said, if you like it, I'm happy. And yeah, we bought it and got a tenant in there straight away.
Fantastic. That's a great story. And it's a great start to your property portfolio and a share trading career, which we'll investigate directly after the break. All right, we've got to go to a break, so we'll be back with Justine shortly after the break. You're back with the Mortgage Busters and Investment Show. Adrian.
Oh, Justine.
So we're just talking about my first investment property.
Yep.
And it also the shares that I bought after I left high school helped with that deposit as well. So we actually sold them as part of the deposit for the investment property.
Wow.
I remember when we paid that deposit down, and my we weren't married at the time. My boyfriend walking out going, "I've got no money in my bank account anymore. It's all gone."
But it's in a house at least.
Yeah, I know.
Better than somewhere else in the casino.
So we pretty much had that good experience. So we had you know, a portfolio of 4 shares that all did very well. They're all your blue chip style shares. Back then.
Sorry to interject, but you know it annoys me, this blue chip terminology. It's really a gambling term, isn't it? Where does that come from?
I sort of say blue chip are your top 10 or 20 stocks of the stock market. That's it. Right. It's really your 4 banks. It used to be BHP, but I wouldn't class. I don't know if you
That's
can class
the thing. It used to be.
That's what I mean. It used to be. So I don't trade blue chips these days. I've got a completely different strategy.
Brown chips.
And we want to hear about your strategy. Anyway, continue on.
So I had that good experience with the share market, which helped us get that first property and that deposit to buy the first property. And then we didn't want to be in shock when our plan was to eventually move into that property. And we didn't want to be in shock when we moved in that all of a sudden we had to pay a mortgage. So we actually made the decision to start paying the mortgage at the full price, and then the rent just came on top of it. So we were pumping the rent back into the mortgage, and we were paying what we would have to pay with a principal interest only.
So you had a plan.
That's right.
Which is fantastic. Yeah.
So you're cash positive eventually. And how long did that take you?
Well, we moved into it in 3 years' time, so we had it rented out for the 3 years, and then we moved into it and had it at a comfortable level. But we were so used to paying that interest rate and that principal interest on the higher interest rate that we kept paying that amount down. Because as interest rates go down, you should keep paying that higher.
Extra
That's a great
level.
strategy. Yeah.
So we kept doing that, and once we moved in, it's like we don't have an investment property anymore. So we pretty much replicated exactly what we did. We started looking around again. We ended up buying a brand new house that we built out in the Sydney Western suburbs for about $239,000, and we got that 300 rent again. So we were very happy with those figures. That we just replicated it again. It worked the first time, so let's do it again.
Well, you're actually doing exactly what we do with our clients. We try to get them under the 270 mark, 300 mark, and with a 20% deposit, they're cash positive. So they're not screaming every week trying to find money. Where am I going to find money? And of course, if there's no tenant, then you've got even worse problems, haven't you? If there's no
So you
tenant.
can have your investment property and still enjoy a dinner, enjoy a social life, enjoy the goodness of life.
What they say, you can be asset rich but cash poor, and
Correct.
you don't have enough money to do anything fun.
But cash positive is a hell of a lot better than being negative geared, which people just don't get it. They think it's got it's got a lot of advantages if you've got a lot of income, but if you're average incomes, it's not very advantageous.
So the catalyst for you and your family and your ventures, it was mostly property, and now went into share trading.
Well, once we bought that first property, we had no money to keep share trading, so the money was gone. But then, we got into a situation towards the end of the 90s and I was still going to investment seminars, and I went to a series of investment seminars where they brought up charts, and I fell in love with charts. And we actually then combined we were married by then.
So can you just explain what that means? Charts.
So charts, or they also call it technical analysis. There's two ways you could trade the stock market. Two main ways. One's fundamental analysis, and that's where you spend time to get to know the companies, their profit and loss statements, who their competitors are.
Is that like Warren Buffett?
Yeah.
Okay.
I don't know whether he combines any charting into it. I haven't really gone down the path of how
he looks at fundamentals of the profit. And
he just gives them a call now and just, hey, can you do this for me?
But
he
analyses
the company and does all that sort of stuff.
Yeah, that's right. Yeah. And that's pretty much what my grandfather did as well. Both our grandfathers did. But it didn't really rock my boat, so to speak. And
it has to rock your boat. It really does.
Yeah, I just went to this seminar and they brought up a chart, and I was like, wow. And I've always loved art and painting and visual things. So for me, seeing a visual chart on the screen and being able to see the health of a share through the chart, I just loved it and fell in love with it and bought charting software. And it's like they say, a doctor can see your health by looking at your blood test. I can look at the chart of the share and see its health. Yeah.
But how did you look at the beginning? Where you
No, I learned how to.
Let's do that again.
Because I'm serious, most people do that.
Well, I went to a seminar and they introduced me to charts. So and that's basically how it started. And then we pulled our super funds together and set it up to self-manage. It was back when self-managed super funds were probably in the early days of coming in. And we thought, well, if we could get started with our super fund and have control and invest it ourselves, and I'm probably, I like to have control over things, and know where my money's going.
See, I love your story.
You've done everything.
I really do, because I looked at the share market, and I looked at fundamentals, the side of things, and the balance sheet, profit loss, and the company profile and that sort of stuff. And when I saw charts, it was just it was like reading a picture. And I totally agree with what you say. It's very you can relate to it. You can read it, and that's what you do, and that's what you help with people with.
Yeah, that's right. And I can just instantly see where the share's been and where it is right now. Now, I can't predict where it's going to go because, as we know, anything can happen in the stock market. So the things that I learnt in my journey was money management. Everything comes down to the exits and having a good money management strategy. You need to take the gambling out of trading. I basically, trading started off as a hobby for me, and we're doing it through the self-managed super fund. And then into the year 2000, we started talking about, well, we've got our mortgage down to a really comfortable level. We both don't need to keep working now. We can live off one income. we made the decision for me to leave my full-time job.
So how many
And then-
years post starting to work was that?
Well, 2000, I left high school in 1991, so this was exactly 10 years later. So 2001 was my first year of full-time trading.
Oh, geez. So within 10 years,
Yeah.
you had the flexibility to choose to work
That's
or
not much time.
Yeah, it's
pretty
not. That's
small.
pretty good.
Small.
Yeah.
But we
yeah.
pumped that money into that mortgage in those early days, and we got it to a comfortable level. And then the next investment property wasn't costing us money because it was cash flow positive.
Positive.
So,
yeah.
and
What a great
it was also
scenario.
a brand new property, so you had that depreciation on your tax
There you
return
go.
too.
There you
And
go. That's all the good stuff. The
Isn't that a
time
great
was on your
story?
side, basically. That's what, as history shows, everything seems to be going up. I say seems because sometimes it does stay stagnant, but it has gone up quite a lot, hasn't it, in Australia? It's gone crazy, actually. Not.
I know. And now
Not a
you're
lot.
teaching people, you're doing seminars, you're helping people.
well, I just fell into the teaching. Well, first of all, I went through my journey and spent
just
that.
before you go to that
Yeah.
journey, we've got to take a break. So let's come back to the journey after the break.
Okay.
All right, you're watching the Mortgage Busters and Investment Show. We'll be back very soon. You're watching the Mortgage Busters and Investment Show. Justine, so within 10 years, you were in a position to really become financially, free or just to be able to do what you wanted to do?
Yeah, well, to have that opportunity to give it a go. We knew we wanted to start a family at some stage, and I wanted to be at home. So that's why we decided, well, before we had kids, let's see if I can give it a go and trade full time and make it work. Can't say it worked straight away.
Fair enough. That's
yeah.
okay. Yeah.
So my impression when I first, left was the more I traded, the more I looked at the screen, the more I did, the more money I would make. That was
Well, that's
far
what
from the
everyone
truth.
thinks.
You know?
Activity doesn't always
No.
equal productivity.
No,
Yes.
he likes that saying.
And I think to start with, I did make money, and that was the thing. It actually looked like I was making money, and then I took on higher risks, and I was doing strategies with options and naked options, and we might be going
Did you
beyond.
say naked options?
Naked options.
I
So
haven't
you've
heard
got
of
the
that.
option to be naked.
That's right. Well, with options, you can have a buy right where you own the share and you write an option over the asset.
That's a naked.
No, that's not a
Oh,
naked.
okay.
That's actually selling an option over a share that you own, and then if that option gets exercised, you have to hand your shares over. When you do them naked, you don't actually own the underlying asset.
Oh, so you're renting
you are just
them.
selling them.
Renting them? Not renting
It's
them?
pretty risky
Yeah.
at that point.
Oh,
though,
it's
yeah.
risky, but you do this for a while, you make money for a while, but it's the big one that can wipe it all out. And I hit the big one,
Right.
the World Trade Center crash.
Oh,
and
yeah,
I
right.
had some naked puts open in the market, which is at that time the market was looking healthy, the market was
So
rising.
did you have prior knowledge to 9/11?
No, I wouldn't have been doing
Yeah,
what
fair
I was
enough.
doing. I actually had just come home from holidays and built into a whole lot of brand new positions, and none of them had time to move into profit. And you can't predict a terrorist attack, and that's exactly what happened.
Is that what it was, a terrorist?
Oh, really?
Ah,
No, I didn't
okay.
know that.
Yeah, now I get it. Okay.
We won't get into
Sorry,
that.
go on.
Yeah, so I
Wasn't-
mean, throughout the whole year, I was going on courses. I was completely obsessed. I was reading books. I was studying. I was doing, as much as I could. I thought, I've got to work hard. The harder I work at this, and I really had to move away from that working hard, and that realisation of trading doesn't have to be that hard, and I had made it harder than it was. So the kick up the backside for me was the World Trade Center crash. I realised I pretty much wiped out all my profits, and my account was in a loss by the end of that period. And I had to close everything out. I had a lot of options positions. What I didn't like back in those days, you're dealing with market makers when you traded options, and they were really a bunch of cowboys. I couldn't get out of my positions. My broker had to work it, and it took until the end of the day to get me out of those positions, because I was very strict on stop losses. If a stop was hit, I had to get out, and so I had to get out of these positions because they were high risk and they were going
But did
against
they
me
actually,
big time.
did they break through your stop losses? Like they jumped through?
Oh, they were completely gapped through my stop
right.
losses, completely. And I didn't
How
know.
is that possible?
Well-
People don't know that is possible.
Yeah, you
And I didn't
have
know
to
what
read
was
the
gonna-
fine print.
I didn't know what was going to happen the next day in the market or the next day. I mean, my strategy is if the exits hit, but the thing was I had too many positions open at once. I wasn't managing a total open market risk. So I completely stopped trading for about a month and thought, why on earth did I do all that? That was just a complete waste of time for a whole year. I'm in a losing situation now. I had a look at my self-managed super fund and it had performed better over that whole period with just my long-term system than all that short-term trading. So that's when I realised, well, that was a very simple system. I wasn't spending much time on it. There has to be another way. And then an instrument called CFDs came into the market in Australia in 2002, which means contracts for difference. And that's where you can trade a simulated stock market. You can trade the same shares on the stock market without having to do an option. So when you trade an option, there's a lot of things you have to consider. You have to consider the strike price, the expiry date of the option, what the volatility is today, whether you should be a buyer or a seller. When CFDs came into the market,
Contracts for difference.
Yeah, you didn't have to worry about any of that. It was just you put the trade on and you set the stop loss. At that stage, you still couldn't set stop losses on shares. So the ability to set us.
Just to interject, right, for our viewers, it's probably getting a bit technical.
It
right?
is, it is.
But the thing is, you know, the stock market is really accessible to most people. You just got to learn a bit about it, like yourself. And you actually teach people to do this.
That's right. Well, I fell into teaching people. So what happened was I built up a trading system then all based around CFDs with what I call a medium-term system. So I have a medium-term system with contracts for difference and I have a long-term system with shares. And they're my two trading strategies. And that developed in 2002. And
But
that's what I still trade
teach
today.
the average Joe or Joanne to do this.
Yeah, I teach them through reading charts.
Right.
And then I have the software that runs the scan for me.
So you got your book?
Yeah, so I fell into teaching in 2003. I was part of a trading group and one of the sons from a couple in that trading group came up to me and said, I want you to teach me everything you know. And I said, come over, have a cup of coffee. We'll talk about a few things. He said, no, I want weekly lessons and I want you to teach me everything you know. So word of mouth started and I just started teaching people through word of mouth. And then the local evening college asked me to run some courses on charting. So I ran some beginners courses on charting. And then 2006, I was in a book called Real Traders, Real Lives, Real Money, written by Eva Diaz.
I like that.
That's another one.
Yeah, another one. And that was my very first book I was interviewed in, and that was published by Wiley. And in 2007, Wiley were looking for somebody to write a book about trading plans. They Googled trading plans, my website came up, and my name, and they remembered me from a previous book, and they asked me to write a book on trading plans. So I was actually pregnant with my second child while I was writing that book, and that's how Smart Trading Plans came to be.
We've got
I was trying to remember what it was called.
We've got just over a minute before we complete this program, but we'll have you back next week. So please come back to us. So, final comments with Justine?
It's too much.
It's too much. No, it is too much. We only just got warmed up with you. Yes.
Plus,
absolutely.
the other book that you were in, the $1 Million.
Show it.
Miss Millionaire. Yes, I was
Miss
asked
Millionaire.
Just a quick comment about that.
I was asked to write a chapter in that book, which that's probably more about my life story and
It'll
how
be
I
on the
got
screen.
to be where I am today.
Okay. All right, we've got 1 minute. We'll be back. We'll have you again next week. We'll come
And we'll
together.
go over those
yes, absolutely. All right, so Bust Your Mortgage Report.
Yes,
Adrian,
yes,
let's
yes,
do
yes.
it.
We're calling it now Bust Your Mortgage Report.
Yes, that's got a lot more impact.
It's all about getting rid of your mortgage, of course, fast. Simple and explained methodologies. Nothing too complicated.
No, simple is good.
Get all your information all in one place, and
But
it's free, of course.
Your mindset is always about busting your mortgage, but also preparing for retirement and living a good life.
Correct.
I reckon Justine lives a good life.
Well,
Thanks,
she's
Justine.
in a spa bath somewhere here, showing her.
Thanks again, Justine. We'll see you
Thank
next week. Great to
Look
have
forward
you.
to it.
Adrian,
Thank you.
we'll see you again next week. You've been watching the Mortgage Busters and Investment Show, and we'll see you again next week.